So, doing a little review of what's happened this morning. So, in terms of the AMD model, you have accumulation, manipulation, distribution. You have accumulation, expansion, reversal, accumulation, manipulation, distribution, then our market opens, reversal, and expands. But what made you think we're looking for long? Well, this chart looks pretty plain at the moment, meaning if you look at it, there's no levels I've got, so this doesn't give you any clear vision off the basis of time of what the market's doing. So in order to get that vision, I have to use the higher time frame PD arrays. So if you look here, so this candle is likely to go up now. So let's highlight the key areas. So you have all-time highs. And then you also have suspension block. So what a suspension block is, it's a fair value gap. So this, if you're looking at just fair value gap, I think that, yeah. But the suspension block incorporates the volume imbalance at the top. Yeah, there's a little gap between the two candle bodies here. And then you also have the candle bodies here, so that's your suspension block. Now that's a massive block. So what you want to do is at least have the quadrant levels on there. I would go down to 8s as well. So we go here, separate it into 8s. How about we can just whack a fib on it, to be honest. Fib, let's do the 8s. Down here, and then just do the quarters. Whack it on, just like that. So you can see, change the colour to black to match up. That's better encouragement. And if you go down to the time frame, this is actually beautiful. So we trade down into constant encroachment. If we're expecting lower prices, we want it to trade further through this, and then we'd be expecting all-time highs to go down to. But like what's happened is it's just manipulation here. This happens at 12 o'clock, and then from 12 o'clock the price wants to go up. So market opens, that candlestick opens here. So you think of the wick being down here, and then the body, and then we're gonna keep trading higher. So the main body is going to be in here. That's going to be the wick that extends down to constant encroachment. Okay. So what I was looking at now, doing this overview of this, I did take a trade on my Apex account from in this region here and up to here. That was on just another eval, so I full ported it, meaning I just took one big massive trade just to get the account passed so you can expand. and so we can scale what I'm currently doing. At the moment I've only got 2 Apex accounts, so I'm looking to add a third in there. Now, everyone looking at this, you could think there's potential for it to come down to these lows here and take out everyone pre-market as it trades at the market open. There's a small red line here. That's the difference between the market closed at 4:15 and when the market opened at 9:30. So it's very insignificant. Usually them days can be hard to trade when that happens, if you don't, especially if you don't know what price is going to do. The blue zone's the same thing. Let me change it. Let's just make the gap colours all the same. So let's make this one blue as well. So they're always blue. There you go. Okay, same thing. Likely price trades through that when the market opens. That's what tends to happen, or at least to a higher degree of it. So when the market opened here, I was expecting higher prices. Yeah, but I was wondering where that reversal would come from. So this is now a concept called optimal trade entry. So optimal trade entry because when you form a low and a high, so that's your what you call a dealing range. So if anything below 50% of the dealing range would be what you call a discount array or a discount, and then you'd spot a premium array, which was called a spot a discount array, which would then be called a discount array in here. So I was looking for key PD arrays to form after we trade down. I was waiting to see if we could potentially take out and do a liquidity sweep and then run higher and get close to midnight, but we couldn't. So what happened was we trade down. So I've highlighted this high here going up to there. That's the highest point on the graph. That's the lowest point on the graph. I say graph, it's chart, isn't it? On the graph, on the chart, whatever you want to call it. We come down. We're below 50%. Let's remove that, we don't need that. Optimal trade entry is between 0.6 and 0.79. That's an optimal trade entry method. So that in itself is a model, or the model. So you could enter there if you're thinking price would go up. What I like to see is PD here, because the problem with the optimal trade entry, well, it's not a problem, but like, I like to know where to put my stop loss. So if I was to just enter on the 0.79, I don't know where I'm putting the stop. If I was looking at this, it would be the upper quadrant of that suspension block, like that. Look how so you've got overlapping concepts. You've got optimal trade entry, you have when you go to the daily, this upper quadrant here, 0.75, that's so I'm expecting price to run higher. So see how it touches, literally just wicks and touches it to the tip of that upper quadrant of that suspension block. Consequent encroachment is here. I was wondering if we were going to get towards consequent encroachment below these lows and reverse from there again, but it didn't, because it's part of the cycle of accumulation, manipulation, distribution. It's likely not to do that because all smart money have positioned themselves here, okay. So in uninformed traders would, for example, trade they would enter the long trades around here as they see price going up, price comes down, takes out London lows, smart money gaining their positions, and again exit above London highs before the Tokyo highs before the open, comes down, smart money reaccumulates their positions, and then exits above these highs, or holds for the day. Okay, so looking at how these key levels are actually supporting price shows you that the market on an algorithm. Okay, they ran off an algorithm. I don't care what other people believe, that's my belief, so if you don't like it, then that's fine. So, and this is what some people will think, is that this is going to be the liquidity sweep. So people who aren't fully trained with ICT concepts would potentially see that as a reversal, even after taking the highs. But we're likely not to do that because, one, this is a massive liquidity void. If you go down to the 15-minute, you can see it clearly here. This is a liquidity void. No price has been delivered in this range. It's just all gone one way. There's all been sell side inefficiency, but there's been no buy side delivery. Okay, so this is a region where price is likely to draw to. Okay, so I've been studying a bit how price can go. I'm looking towards all-time highs for the rest of the day. So when price comes down into here, it's just, again, if you were to study this in the same fashion as what we've done, isn't that magnificent? Low, high, dealing range, inefficiency of the fair value gap, stays in the upper half of that. I think I've made the point clear about how price reacted at this level, yeah, and these levels of the algorithm. So I just want to delete these just because it doesn't look very pretty on the chart. You can see how it's ran off the algorithm. So this will make it clearer, but that's showing me the purpose of fair value gap. The optimal trade entry at the upper quadrant of the suspension block. Then we have fair value gap, stays in the upper half of it, and it goes, yeah. Now it's 10:30, so this is where a lot of smart money will offload their positions. I suspect price to keep going higher, yeah. So they would have offloaded here, re-entered, offloaded. That's where smart money is doing. They're aiming for the liquidity. So this is now engineering more highs, trapping short sellers. We know the liquidity void needs filling. Okay. And what else? Yeah, so price is now at the new day opening gap high. So this is the blue area. I shouldn't expect this low to be taken out, to be honest. That makes sense. So then, how far can price go? I saw ICT doing his video yesterday. It takes the manipulation here. This is the bit that I'm not sure on. That's a manipulation. There. And then he does projections higher from that. I'm not sure exactly. I need to look this up of exactly how far price can go. what I have been using is this indicator to tell me for 5-day ADR. So notice yesterday, this ADR tells you exactly the time where 5. Wow, the window's pretty windy. So if you look, yesterday we sold off. It tells you the low of the day. Basically, this is what indicator does. So you've got this here, it's low of the day, yeah? And that candle there tells you at half 10, 5 ADR. So if it gets to 5 ADR, that means we've met the high of the day. But at the moment, we're not at high of the day. Yeah? So when this showed me 5 ADR, I'll get out of my trade. It's the average daily range. So I believe it can go higher than this. And the next liquidity pool, get rid of that off the chart. There's all this liquidity void in here. All-time highs. So that's the direction my bias would be in. So yeah, it's just a quick video. Don't think there's too much else for me to talk about. But again, engineering the highs, relatively equal. As we trade into lunch, I expect us to run them highs. Let's just watch it for a bit. So you get both optimal trade entries. So if that's that could be your model. You want to just stick to one thing. And it's amazing how it touched the upper quadrant of that PG rate in the daily chart. So that's why you're overlapping the ideas. So the price couldn't get to midnight, which shows we're strong bullish. What else can we talk about? Yeah, so it's taken liquidity even before it left that little pool here to be taken for the open. You could say these are smooth, but again, it doesn't fit with our narrative of using the levels. This was a reaction off that consequent encroachment. I might send this to RTT and see if he will look at the video and see if I'm about right. Talking specifically about the entry though, if you didn't want to use optimal trade entry, you could have a market structure shift and a fair value gap. See if we can find that. So I'd have liked to have seen this be a fair value gap, but it wasn't. But the first fair value gap you formed in a macro here, which is 956. So when I entered, I looked at this. New day opening gap high here and low. Look how it reacts off that level. You tell me it's not an algorithm. So if you were to have your entry based on the fair value gap entry, enter, stop loss below here, targeting this high, or this high up there, unless you wanted to hold for the day, but then you'd have had to weather that retracement and confident in the price not reversing. Okay. So I was doing that. I just exited my account when I hit the profit target. That's a 6.3. You managed to get the whole thing there. And if you're going on the higher for the day, you're longer. So yeah, let's see if we can get up to here now. Again, looking at the same optimal trade entry concept. Let's go. Every swing high and every swing low, this happens. If it can't get down there, it means it's even more bullish. So if you were selling, the key levels would be flipped the other way. So now, price can also react off 50% of the level, which is what's happened here. It hasn't even managed to get down to optimal trade entry. Yeah, it's reacted off the 50%, hasn't managed to hit the trade entry, so that indicates what? We're going up. But from a visual perspective, from a new trader, this will look like it's going down. Yeah, but we know relative equal highs, the high on the right is lower than the one on the left. Okay, and again, it might, if you've got a triple top like this, it's forming, it's highly likely to be ran through. And just watch it for a bit, see if it can take out the highs. To be honest, I'm going to start using this optimal trade entry more because it's very useful in terms of looking at smaller swings as well, and very much gets you to incentivize just entering as price is coming down. For example, this is a PGRA as well, this fair value gap. If you're always waiting for fair value gaps, then you could be getting an optimal trade entry. It all depends on what you're comfortable with and what your model is, but I quite like this optimal trade entry the more I'm looking at it and how price works relative to it. Again, optimal trade entry here at 0.709 or between 0.62 and 0.79. That zone is your optimal trade entry. A big massive candle on. So there's a little portion here left open. And then here we go. Another fair value gap. It looks like it's being respected. Let's see if we can take this triple top. Just that indicator again. So we're not at the. I'm trying to work out what these are. So you've got 1 average daily range, 2 average daily range, 3 average daily range, 4 average daily range. And low of the day at that time often can form. The high or low of the day can often form at the. Won't go more than the 5 average daily range. So we didn't reach the 5 on that day, but it can just be used as a rough estimate if we hit it. See if we can find a day where here, for example, on this day. One second. Notice how this candle is blue at that exact time. So at 11:15, and then price doesn't go higher. So every time this blue zone forms, it's like it's the only indicator I'll ever use. It's not an indicator, or it's just telling you 5 times the average daily range, and where the high forms, it doesn't go any higher. If the blue zone forms, it doesn't go any higher. And again, that indicator is called 5-day ATR intraday tracker. And it just tells you when you hit 5. So for example, this forms and you think price is going to go higher, you're probably wrong. Okay, and you're more likely looking for like a retracement, or again like a retracement to go back up, but you know it's not going to go higher than this original high. Let's see if we've got another example of that happening. We haven't, because it only goes back so far, but trust my word on that. Doesn't mean every day it's going to reach 5 ADR, but when it does, that happens. So, ICT, if you're watching, how is my commentary on this? I'd like to hear if I've missed anything, if I've got anything wrong. Yeah, like looking at Tuesday. I'm just seeing this as we go through. Below. Look at that optimal trade entry. Again, inefficiency in line with optimal trade entry. They go higher. So these things repeat itself all the time. We're bullish at the moment, so I'm mainly showing you bullish examples. I'm sure there are plenty of other ones as well for shorts, which I will get to once we are in more of a bearish market. And then yeah, that's what I've been doing as well. Is been looking at where the fair value gaps form, which has been quite useful. So I've been getting the fib out again. The fibs is a very useful tool. High to low. And I've been using for the fair value gap mechanism on the fib. You want 0.75, 0.25, and 0.5. And you want the fair value gaps to form around this level for projections of how price can go. So looking at this of none, yeah. Oh, you've got the 0.5. You have actually got the 0.25. Yeah, 0.75 and 1. In my opinion, it's going even higher than this. So it might be the case of reframing that to be down here. Appreciate fair value gap forming here. But they can be used, sometimes it's more obvious than others, but to project your range of how high price can go, try and line the fair value gaps up with 0.5. Let's do a run that's already happened, because sometimes it's more difficult with a run that hasn't formed, because you need to watch price. But like if you take one that's already formed, like that run up there. The fib's playing hard. down to this high. Roughly. Look how you've got fair value gap, fair value gap, fair value gap, reach the high. And that's every single quadrant level is having a fair value gap. So when I go here, there's my first fair value gap. Should be looking around here. See when we can get the 25 and 50 to line up. So look at that. So can we hit that level here? Yeah, it's the end of the run. You could potentially hold for that. You don't need to. You can just target the high. Target the new Dakin gap of the high. Yeah, notice how you got this little fair value gap here, low, little fair value gap here, big fair value gap. You got another fair value gap forming at the 0.75. It's here, got two. Okay. And it could just be coming into holding, so we're starting to approach the lunch hour, and I expect us to start running up through that during lunch. Potentially want to come back down into this before running higher as a form of, we've got consolidation, you might get that manipulation to run higher as well, so be mindful of that. But yeah, it could just want to keep going up at the same time. So when you have like consolidation, you're looking for expansion one way or the other, and then the trade in your intended direction. I think this video has been quite helpful if you're new to ICT. Them are the things that I found the most useful for me trying to make sense of things. ICT is looking at lots of different things, as he's been doing it for like 30 years or so. So yeah, it's like he's been doing it for 30 years, so he's looking at everything down to the wicks, he's looking at the volume of different PGA, there's 82 of them. So yeah, you don't have to know what 82 to know where the market's going to go. You just need to know where smart money are, where the relative equal highs and lows, where the market's drawing to, and then when your entry is. And remember not to chase price, because if you start chasing into something that you think might go higher, you likely get whipped back down, come back down before you usually get that retracement. If something offers too much in one way, it will come down to rebalance. So price always wants to rebalance the market. Notice how we have that liquidity void here, only that one-way delivery, and then it needs to rebalance that. Yeah, some days it doesn't, like yesterday. That's likely to then become an area that needs rebalancing, for example, today, or going into Friday. So what day? Thursday today. So yeah, I hope that makes sense, and just watch this high get broken. Everyone's got their stops here, like their selling positions here. You can use that 5-daily range indicator. I'm going to look more into standard deviations and make a video on that. Look at the inefficiencies, where they are in the dealing range, where the relative equal highs, relative equal lows are. Look where price is jagged, price isn't likely to come back down to that. Where price is smooth, again, even though we took that liquidity trade down, what would this be? Is it that high? And that high. If you were to go to a 5-minute chart, there are the relative equal highs. more of a fact, this liquidity void. There we go. We got above, like I said. So yeah, that'll be enough for this video. I'm trying to make the videos a bit shorter to try and get the viewers. But yeah, peace out guys, I hope that was helpful. That's the main purpose of doing these. Helps me talk through, helps you get some learning how I make sense of it. Because again, learning ICT is hard. ICT is like so good at it. Good at explaining it as well. But the helping people understand is also big for me. And explaining you can do in different ways. So I'll explain in a different way that ICT will explain things. And I'm not saying that's better or worse. What I am saying is it might resonate with you as someone who's not as skilled as him just yet. Just yet. If I ever would be, but there's someone who's a newer trader, someone who's just making profitability, just turned that corner now. Yeah, that sort of might help you sort of look at things in a way from a newer trader and what I focus on opposed to what I'm not focusing on. And again, there's so many videos, so much stuff you can learn out there. But the main thing is you buy with smart money, know where the uninformed traders have their stops, know where the market's likely to go to, and yeah, you want to be trading when price is coming down ideally. So entering on the fair value when price is coming into it, entering in the fair value when price is coming into it, entering on at that upper quadrant level when price is coming into it, and that's the goal. And just manage your risk. So yeah, that will do for this video. Thanks a lot for watching if you watched, and peace out.